Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 15th of February 2021, and we're looking at what has happened to precious metal prices today and the sudden and noticeable rise of platinum. So let's take a look. Now earlier today we produced a video, episode 11 of our Bitcoin versus Gold series, where we looked at Bitcoin nearly touching $50,000 a coin and asked whether it will rise or fall from its current position. But the star in the precious metal space, though, has been platinum today and recently. Now we're beginning to appear like soothsayers at the moment. 12 weeks ago we started a series on Bitcoin, and already its price has more than doubled in that time. Then, just over a month ago, we produced a series on platinum, and its price have moved up at least $200+ since then. Now we enclose links to the 3 platinum videos we produced below. Meanwhile, a lot has gone on today, even though a number of markets are closed. Let's take a quick look at a Bloomberg report published a little over an hour ago, as it condenses what's been occurring quite nicely, and it's relatively short. Bloomberg Wealth article dated 15th of February 2021, 4:06 p.m. GMT. Headline: Platinum soars past $1,300 an ounce for the first time in 6 years. Platinum surged above $1,300 an ounce for the first time in more than 6 years on bets that a recovery in industrial demand and stricter emissions rules will tighten supply of the metal. Gold edged lower. Tougher pollution regulations requiring vehicle makers to use more platinum in catalytic converters are supporting prices, said Margaret Yang, a strategist at Daily FX. Platinum has gained 21% this year, narrowing the steep discount with sister metal palladium, which was the star performer over the previous 2 years. Platinum has largely outperformed gold since November 2020, as reflation hopes and a projected recovery in global auto sales brighten the demand outlook for the white metal, said Yang. After years of surpluses, COVID-19 mine shutdowns in South Africa saw the platinum market deficit widen to 400,000 ounces in 2020, Johnson Matthey said in a report last week. While the market could return to a surplus this year, disruptions at a key refinery in the country improved the immediate outlook for the metal. Platinum futures rose as much as 4.4% to $1,314 an ounce. Spot platinum climbed as much as 4% to $1,306, the highest level since September 2014, and traded at $1,301 as of 4:06 p.m. in London. The outlook for prices will partly depend on whether investment demand from those expecting a catch-up to gold and palladium remains supportive. Platinum got attention from financial investors, said Kirill Chukyo, a strategist at BCS Global Markets. It's getting its momentum now due to speculative demand. Gold slipped as investors weighed the slowing pace of coronavirus infections, as well as immunization programs globally, and the impact on growth. US markets are shut for President's Day, while exchanges in China, Hong Kong and Taiwan also are closed Monday. The precious metal has retreated about 4% this year amid higher treasury yields, which diminish the appeal of bullion because it pays no interest. Still, the haven asset has gained support from bets that more stimulus will be inflationary and that a recovery from the pandemic will weigh on the dollar. Spot gold fell 0.3% to $1,818 an ounce in London after climbing 0.6% last week. Silver and palladium advanced. The Bloomberg dollar spot index declined 0.1%. End of article. Okay, this video is going out at around 7 p.m. or maybe 7:30 p.m. GMT. But the time of writing this is 17:35, so that's 5:35 p.m. And so prices may very well have changed by the time you listen to this. Gold is down today $17 at $1,118. Silver is up 22 cents at $27.61, a rise of 0.8%. Palladium is up $17 at $2,417, a rise of 0.7%. But platinum, which has outshone them all, is up $49 at $1,309, a rise of 4%. Equity markets in the UK broadly up 2%, and the rest of Europe around 1% higher. But of course, American markets are closed. And the dollar index is down 0.14 at 90.33. So where does this leave us for platinum and other industrial metals? Well, if one is of the opinion that lockdowns are going to be eased sooner than many anticipate because of the vaccine program rollout, as the UK is beginning to experience, then we should see a rise in output and traditional manufacturing. Add to this the potential for additional stimulus spending by various governments, as well as central banks easing monetary policy or lending restrictions, we are setting up an environment which, at least short term, is likely to prove positive for industry. Add to that the fact that currency debasement too is continuing at a faster rate than investment yields are rising. There is little doubt that in the months ahead, many of the industrial metals, and especially silver, currently undergoing a retail squeeze as well, should benefit from additional price rises. Now, gold, at least short term, appears to perhaps be the least beneficiary. But we're monitoring prices there, because should they fall back to $1,750 or even $1,700, gold will once again become an attractive proposition. However, we need to see that fallback in order to get gold investors excited again and to make it attractive to cover the wider premiums that we are experiencing on a number of gold retail products. Now, before we conclude this video, we've been asked by some members our views on buying silver through exchanges such as Bullion Vault or similar, who hold allegedly gold and silver and platinum bars offshore, as they're concerned about premiums being paid through bullion dealers and also, of course, the current lack of availability. Now, as we've often stated, there is no real substitute for having the physical in your own possession, especially in a financial crisis. However, if you have the confidence as we do that we're not expecting the financial institutions to collapse overnight, but we could still see a gradual fall in the US dollar and a rise in silver prices and gold ultimately, our preferred method of buying for now, benefiting from that envisaged gain, would be through a company like Bullion Vault, which is the one we're familiar with, but there are many more, and particularly in whichever country you happen to be in, so that we can take the benefit from a rise as opposed to actually taking possession of the physical. Though, of course, you still have that option. Now, the reason for that is manyfold. First, at our age and current holdings of close to 1,000 ounces in silver, we ourselves don't really need more physical product. Now, we fully accept that many of our subscribers have many times that amount and are still accumulating. And also a number have just a fraction of it. We hold, certainly in dollar or sterling terms, a larger proportion of our physical in gold. But that's down to taxation issues and so forth here in the United Kingdom. And to be frank, we feel we have almost enough physical there too. But that's really because it's been accumulated over a large number of years. What is looking attractive moving forward are also a number of precious metal equities or mining firm equities. And as we believe in a balanced portfolio of investments, we're looking at these too, especially as we believe that silver really does have a promising future over the next few years. You see, it's horses for courses, and of course physical is safer unless you're prone to robbery. But as for us, we're getting older, and if we have to flee because of insurgents attacking us in an apocalyptic scenario, 1,000 ounces or more is more than enough to carry and run away with. Thank you very much. Meanwhile, keep an eye on platinum. We suspect there is still more juice in that orange yet. What are your thoughts? Please share them. Thank you so much for listening. If you haven't already done so, please subscribe to our channel. Not forgetting to press the bell sign so you're notified of our videos as and when they're published. And a brief reminder to our Bitcoin episode 11. Will we reach $50,000 Bitcoin this week? All links, as usual, below. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.